Shrinate. I'm Supriya. Shrinate. Now, the conflict of interest case involving ICICI Bank top boss Chanda Kochhar is only getting bigger by the day. ET now learns that market regulator SEBI is keeping an eye on the kind of disclosures being made by the bank. Now, even as stock exchanges have started seeking clarifications from the bank's management on the flow of news from various sources. Not just that, we also learned that the development at one of the country's top banks have caught the attention of the government right here in New Delhi, which is in constant touch with the market regulator, in fact, banking regulator, the RBI. All this is happening when the bank's board is meeting today for a review of bad loan resolution. Sources say the board is likely to discuss the preliminary inquiry that the CBI has launched against Ms. Kochhar's husband Deepak Kochhar and Videocon chairman Venugopal Dhoot. On the last street, investors punished the ICICI stock mercilessly, pulling down the market cap by more than 10,000 crore rupees in a single trading session. In fact, ICICI has lost 30% of its market value, or a whopping 70,000 crore rupees. The big crisis in one of India's largest private bank and what it means to the banking industry and the market. That is the big topic of discussion, debate and deliberations right here on the India Development Debate tonight. And I've got a stellar panel joining me right here to take those discussions forward. Meera Sanyal, former CEO and chairman, RBS India; R.K. Bakshi, former ED Bank of Baroda; Hemendra Hazare, money market expert; and Maithili Bhusnur, a consulting editor right here at ET Now. So thank you each one of you for being with us. And Maithili, if I may kickstart things with you. This whole case and the kind of, media speculation and limelight that it has got, is this a case prima facie one of impropriety, or do you believe this is a case where there was an error of judgment and conflict of interest that should have ideally been disclosed before?
Well, it's hard to believe that there really was, just oversight. There is a clear impropriety because as the CEO, I think Ms. Kochhar was fully aware of the kind of disclosures that are necessary to be made, particularly when you're making such a large loan. And it's not, I agree, the question is not about the loan itself. The question is the conflict of interest. The loan was not being made to a connected party, but the loan was being made to a party which had very close business dealings with a connected party, the husband of the CEO. So I think there was very clearly a conflict of interest, and ideally there should have been disclosure. She should have perhaps recused herself, even if it was a consortium loan, and even frankly, even if she had recused herself, the very fact that it was a connected party to the CEO would have made any kind of lending decision suspect. So ideally, in fact, I think there should be no case whatsoever for conflict of interest. Every loan proposal should ideally come along with some kind of a certification by all the members of the credit committee that they have no links whatsoever with any party to which the borrower account could be having business dealings with. That would have kept her clearly in the clear. Today there are questions, there are loose ends, and until the CBI completes the inquiry, there will always be a needle of suspicion, rightly or wrongly, on the CEO. And that is not a good position for the CEO of a bank, because banking is all about trust. So yes, I do not think it was just oversight. There is clear impropriety. Whether it was accidental or not remains to be seen.
Right. Okay, Meera Sanyal, coming on that, in hindsight, Maithili is not too convinced that this was complete oversight, but in hindsight, did Chanda Kochhar err on ground that she did not make a disclosure to the bank's board about her husband's business deal with Videocon? And that perhaps would have ring-fenced her from the controversy that she finds herself in, which is obviously hurting her personal integrity. And of course, one thing is that she could have recused herself from the decision, though she did not head that committee and all of that. But do you believe, in hindsight, the error was that disclosure wasn't really made to the bank's board?
Well, Supriya, it's, I think it would be incorrect to comment on it because we simply don't know what disclosure she did make or she didn't make. A lot of this is, is speculation in the public domain. But I will say that there are a couple of things in the whistleblowing complaint that come to attention. The first is Mr. Gupta leads with saying, he talks about the donations which have been made by the Videocon group to the ruling national party, the Bharatiya Janata Party, and comments on how much larger this amount is than the previous year. So this comes, this raises the whole question of crony capitalism and electoral funding, which is at the root of a lot of the concerns with the banking system today. The second, of course, is the issue in terms of conflict of interest, which Maithili has talked about, in terms of the family relationship and the lending decision. But the third issue, which I think which we should also focus on, let us say there was no conflict of interest and let us say there was no crony capitalism. Was the lending decision in and of itself the correct one? Did the credit committee, whosoever may have been on that credit committee, make the correct decision in lending to a group which already had stressed assets? And I think one of the things that is important to focus on in this case, I'm sure, as Maithili has said, and I certainly hope that the investigative agencies will do a thorough job and come out with a response or come out with an investigation that is fair and just to all concerned, to Chanda, to the bank, to the shareholders, to everyone, and I'm sure they will do that. But the real question to me is, let's move beyond the specific and go to the overall problem with the banking sector, where a lot of this has been happening, where we have NPAs in the public sector system alone of 6 to 7 lakh crores, and in the the overall banking system close to 10 lakh crores. How are these loans being made? Are they all because of crony capitalism? Are they all because of collusion or corruption? Are they significantly because bad credit decisions are being made, or is it because of business risk? And I think we need to address all of these if we are to have a healthy banking system going forward, not just from a regulatory point of view, but also from an institutional framework point of view.
Okay, I'm going to take this question up with Mr. Bakshi and then go across to Hemendra Hazare on the specific whistleblower complaint. But Mr. Bakshi, just to come to you, the ICICI board statement that has come very categorically says that she did not recuse herself from the committee as the borrowing company itself had not helped her husband. The question is this too narrow an interpretation of the conflict of interest? And the larger question is, does this entire case, does this entire controversy at one level trigger a review of disclosure norms, especially with regard to conflict of interest, both in the Companies Act and in the Banking Act? Because my own understanding is that there are no proper regulations in place as far as disclosure of conflict of interest is concerned. Are there any RBI circulars at all that kind of, streamline this, govern this? Does this trigger the need for a review of these kind of disclosures? Mr. Bakshi.
So, from the limited information that we have no reason to believe that, at least going by the letter of the law, whatever disclosures were required or whatever course of action was required on behalf of a director on the board or on the credit committee would not have been followed. Means there is nothing to prove, and the present board has also come out in support, at least on the process part of it. Now, and we have of course in our career not come across situations where any of our directors was related to somebody, because under Banking Regulation Act you are not supposed to lend to any company where any director is directly involved or he is a director, but being a relative, and in this case it is a very indirect connection. So, I think the letter of the law was satisfied. Whether it needs to be broadened, whether it needs to be coming out of the lessons, some spirit needs to be brought into the letter of the law is something to be considered. But I think the credit committee, whether she would have recused herself, as Meera has very rightly said, whether the credit decision as such was proper. And I think the credit decision, whether the borrower is acceptable, the acceptability test, going by the rating, going by the business, going by the past experience, going by the whatever viability study would have been done, that would have been proper. And as we know from whatever news is there in the public, that the committee was being chaired by a chairman who was different from the person under discussion right now.
Yeah, absolutely, Mr. Kamath, and I'll come to that in just a bit. But Hemendra Hazare, in a lot of ways, I want to ask you a question. Should this, and does this mean there needs to be more active tracking of family interests, of senior officers and CEOs of banks, whether it's public or private sector? Does there need to be a more active inquiry? In fact, I was having a chat with Maithili before the show and she mentioned something of the science that whether as a matter of practice and abundant caution, banks should have a system of taking a declaration from every member of the credit committee that they are not dealing with any company where members of the family have interests. Do you believe that's the abundant caution that banking needs to practice? Because A, it's about trust, and B, it's about money.
So you would expect that the CEO of a prominent bank understands the spirit of corporate governance. And in my view, the spirit of corporate governance in this particular case was clearly violated by the CEO, because this is not some distant relative of the CEO, this is her spouse, her husband. What is not in doubt also is that Mr. Dhoot was an investor with him at some point in time. So that is not in doubt. And the fact that the Dhoots were, through Videocon, major borrowers of ICICI Bank, it should have been in the spirit of corporate governance that Mrs. Chanda Kochar, as the the joint managing director and CFO of ICICI Bank at that point in time, should have disclosed it to the board that my husband has this venture with Mr. Dhoot. I'm sorry to say this particular disclosure doesn't seem to have been done, because otherwise ICICI Bank would have highlighted this. And I think it's extremely that this conduct of hers should be minutely examined, because it really tells you how the corporates function in this country, how there is a nexus with banking industry, how the funds are routed to them. I think it is extremely important that people should start probing this and not talk about the broader problem of NPAs in the industry, which we all understand. But here is a case where you actually see from a micro angle how deals are done, how what kind of transactions through multiple means, shell companies, offshore lending. See, this is the way deals are done in India, and that is why it is extremely important for this to be investigated and for the public to know how such banking is done with the private corporate sector in India.
Right, but before I go into any of that, I have to ask a question that this issue was red flagged, and Maithili, the whistleblower, had blown the whistle in March 2016. Why did it take so long for the regulators or for the government to take note of this? I mean, these deals way back to 2009 till 2012. I mean, the whistleblower talks and accuses the PM of ignoring the conflict of interest in the loan controversy, like he alleges. He says he flagged it off in March 2016, sent a reminder in Feb 2017, but nobody acted on this, unless, of course, reports started appearing in the media, and that's when this gathered momentum, this gathered space. So why did nobody act on this? It also raises the question on apathy within the system, which involves two regulators, SEBI and RBI, and the Prime Minister's office.
Oh, well, absolutely, Supriya, it defies understanding, because the whistleblower's letter was very clear and very categorical. It listed the sequence of events, and surely any regulator should have done at least a preliminary investigation. It is very strange, considering particularly that the regulator, particularly the Reserve Bank of India, is on record saying that it has complete powers almost vis-a-vis private sector banks. In fact, their angst was that they didn't have to have commensurate powers with public sector banks. So the question arises that when you get a letter like this, and it's not a small account, it's a large account, it's a large exposure of the bank, it's a large bank, and the accusation is very damaging. So what did the regulator do? It's very difficult to understand. Why did the regulator keep silent? Did they investigate? Because if they did investigate and find that everything was completely above board, then they should be coming out with a statement right now. So it really defies understanding, and this, I think, is perhaps what strikes at the root of the problem, because unless our regulators have credibility, and it's equally true of SEBI, because remember, both ICICI and Videocon are listed entities. So what did the SEBI do? What did the Finance Ministry do? The whistleblower has given a very detailed account of how transactions and this uncanny coincidence between the loans to Videocon and the increasing engagement of Videocon with New Power. So surely somebody should have investigated. I find it very, very difficult to understand.
On that note, I really want to put the spotlight on RBI and its own role amidst this entire controversy. And Meera Sanyal, you've been a banker, you've dealt with the regulator. ICICI Bank is a RBI designated systemically important bank, quote unquote, and its troubles perhaps can spread to the entire financial system, many people believe. What should then the role of the RBI be? Because there is a lot of uncertainty out there. There is a lot of grey, a lot of questions in people's minds. How should the RBI be addressing all of this? Because, I mean, in its supervision and authority, the RBI not too long back had said it had greater control over private sector banks than public sector banks. Is it not time to assert that control then?
Well, of course it is, and I think Hemendra Bhai is absolutely right. I mean, there is a nexus between banking and the corporate sector, but I think we should be quite blunt about it. There is a big nexus between the corporate sector and politicians, and that is also at the crux of this case. I mean, I think we should be quite candid about it. Why are these loans made in the first instance? What is the power that the corporates have over the politicians? What is happening with electoral funding? And by the way, it's getting less and less transparent. Now, companies no longer have to declare in their balance sheet what their political donations were. And then we have this wonderful instrument called electoral bonds, which is going to make it even more untransparent. How is it? The question is, how is it that corporates get away with this? How is it that they persuade bankers to get away with it? And as I said, clearly there are a couple of things going on. There is crony capitalism with political interference. There is corruption and collusion, which is going on. And then there are bad credit decisions. And then there are business risk. And all of this is being lumped together in one big lump. Of course, the regulator is important. But as I said, the institutional framework is also important. It's easy, Supriya. I mean, I'm sure in this case, and I go back to this, we don't have all the facts, and I'm sure the facts will come out, so I don't want to preempt any investigation. But what I am saying is that it's really, really interesting if you look at how this whole situation has evolved. Let's draw a parallel with what was happening with credit cards and with microfinance. We have seen big crises in those sectors. How were those resolved? At one stage, CIBIL stepped in, and now the data of all of us, if you or I or anyone else takes a credit card, our data is lumped together in CIBIL and they track our history. The question is, does the RBI know how much any borrower has borrowed from the entire banking system? The answer is yes. The question is, does another bank know how much a borrower has borrowed from the banking system? And unfortunately, the answer is no. As early as 2002, there was an RBI paper saying that corporates should be bought under the purview of CIBIL. It is now 2018 and that hasn't happened.
Right.
You can see, I mean, we talk a lot about blockchain technology and, and transparency. One of the ways to bring all of this into order, whether it is political funding, whether it is corporate nexus, is to make this transparent. Put these people on a CIBIL-like database. Yes, you now have a central repository for big industrial credits, etc. But make this transparent. Let everyone see who is borrowing from who, what is the nexus, what are the conflicts of interest, and you will have good behavior.
Right. No, certainly, absolutely certainly. And there's a reason why we are even questioning the role of the government. The government can't stay a mute spectator amidst it all, because the reality is that, the stock has lost 6% in trade. And as shareholders, people would want to question what's really happening at the bank. And you raise a very important point of the nexus between government on one hand and corporates on the other. But just to defend what is happening at the bank, Hemendra Hazare, coming to you, the board has very categorically stated that they were independent arms like the credit ratings, risk rating, credit appraisal, credit approval monitoring proposals, etc. And Chanda Kochhar wasn't even the head of the credit committee. In some sense, her influence on the loan perhaps that was dispersed was very, very minuscule. Wouldn't you agree with that?
I would totally disagree with that, because here in this particular case, Chanda Kochhar was the CEO, and as everybody knows who has worked in banks or closely monitors banks, the CEO in a bank is all powerful. That even if they are not even on the credit committee, they can easily get large ticket loans, easily through these committees, having, all the supposed corporate governance structures in place of independent directors, independent credit rating individuals. If the CEO is behind the loan, it can pass extremely smoothly even without the physical presence of the CEO being on the committee. In fact, that's the way a lot of them do it. Now, sadly, in this case, and where she has got caught, is that she did not recuse herself from the committee, and that's why she's in trouble now. But this is very easily done in any bank in this country, be it public sector or private sector, that if a CEO is backing a loan, you will find that independent directors, the head of credit of the organization will all toe the line and work in perfect synchronization normally. It's very rare that you will find a senior officer disagree with the CEO on any loan, because in the private sector, because of their long tenures of CEOs, you will be out the next day. So this is the way, actually, this is the way deals are done in this country, and I think we must recognize it. And therefore, I'm very glad that we are getting this window of opportunity to see how in this particular case things have been done.
Right. You know, Hemant Hazare, hold your thoughts there, because I want to take this argument and the same chain of argument to Mr. Bakshi. And Mr. Bakshi, while the ICICI Bank statement very clearly says that they had less than 10% stake in a consortium that was lending about 40,000 crore rupees to Videocon Group, and they lent about 3250 crore rupees. So what's the big deal? I mean, many people will say that, and I tend to ask that question also. But the counter question to that is that what was the big rush? I mean, given how things were, and given the fact that Videocon exposure to our ICICI was then 5.6%, what was the big rush? I mean, look at the sequence of events. Why did ICICI Bank have to lend to Videocon, despite the fact that, you know, they say we just followed the lead lender, and the lead lender had you know, many other lenders had given. We just had 10% stake in the consortium, so we went ahead and gave loans. What was the big rush? Why did they have to do it? Mr. Bakshi.
I think we are in no position to judge whether it was rushed and whether it was an inappropriate credit decision. Lending to corporate, and ICICI Bank is a corporate lender bank, and if it was partaking of a percentage in a big consortium loan, we cannot find fault with that. I really don't know whether it was rushed or not, because consortium generally will try to follow certain timelines, and I really don't know whether there was any rushing in that. There are three issues, I think, being discussed here. One is the process of the credit that was done. Second is corporate governance, the best practices of corporate governance and the letter of corporate governance. And the third is whether there were any benefits which were not legitimate exchange in lieu of the credit decision. So, the first part of the credit decision, now many, maybe 10-15 other banks have also lent under the same 40,000 crore consortium loan, which may be perfectly all right in the assessment and the process. Why this particular sanction of loan is coming into discussion is not because of the account turning NPA. Good credit decisions can turn into NPA because of business risk, or as we have recently seen in case of infrastructure loan because of environmental issues, and I am not talking about environment clearance, many other linkages not being there. So, meaning no fault of the bankers. So, good credit decisions can go bad. There can be weak credit decisions also, but very legitimately taken. So, that is not the point, and many other banks have given. The point here under discussion is corporate governance, and that also not the letter of it, but the spirit of it, and the other third thing is the benefits exchange or taken. Benefits exchange or taken is for the investigating agencies to find out. We are, and we should not be commenting on that.
Okay. While at investigative agencies, and I don't want to preempt anything, I think they should take their own course. We in media or anybody else should not sit on judgment and decide what has been done and what should the verdict be. We don't want to do that. But Maithili, the board seems to have taken cognizance of the paperwork or the documents that were available. But should the board be satisfied with just an internal probe, or do you believe standards of transparency require that the board should open itself or the bank to an external probe on this very matter?
Oh, well, yes, certainly, Supriya, I would agree. The highest standards of probity and integrity, particularly for a bank, which, as I repeat, is in a matter of public trust, you're holding the money of depositors at large. The highest standards of probity would require an independent investigation, and not by an agency appointed by the board or by the bank, either by the regulator or the CBI. And ideally, in the period that the investigation is going on, the CEO should step down, so there is no suggestion whatsoever. It's like Caesar's wife. It's not enough to be just above suspicion. You must be seen at large as being above suspicion. So it would be ideal if the CEO were to step aside for some time and say that till such time as the investigation is complete, in the interest of probity and the higher standards of integrity, I will step aside. And where I disagree with Meera Sanyal and I agree with Mr. Bakshi is on the credit decision per se. What is at fault right now is not the decision per se. Any decision, the best of decisions can end up as being an NPA. What we are questioning now is the manner in which the decision was taken. Were full disclosures made, and was it ideal for a bank to have lent to a borrower who had dealings with a very close relative of the CEO? So, it is the manner of the loan, not the loan per se, that is being questioned. So, it is very important, I think, that you have an independent agency, ideally an investigation by the regulator or the CBI, until such time in the best interest of probity, it would be best if Ms. Kochhar would step aside and say, I will resume office only when all allegations against me are cleared completely.
Maitri, I will have to cut you short there. I've got very little time on the show. 3 last questions, and Ms. Sanyal, I'm going to come to you very quickly. Does the bone of contention really not rest with how the loan was given, or you know, whether this was a good decision or not? The bone of contention perhaps is the transaction that did not seemingly happen at a fair value, and which is why many people believe it appears murky. Will you agree with that?
Well, as I said, Supriya, I mean, there's no disagreement with what Maithili or with Hemendra Bhai have said. I mean, clearly there is something which needs to be investigated. All I'm saying is let that investigation take place. My question is a little bit more. I mean, I think it's very convenient to say we are not questioning the loan. We are questioning the loan. We should question the loan. In Mr. Gupta's allegation, he points out that Videocon was already facing NPAs in the region of 12,000 crores when this syndicated facility of 40,000 crores were made. The question is not just why ICICI made it. I'm sure there will be answers to that. The question is, why did the syndicate lend taxpayer and depositor money of 40,000 crores to a group that was already stressed? We do need to start asking these questions, because these are the questions to be asked. I absolutely agree with Maithili. Banking is a business based on trust and credibility. But this is fiduciary money. This is the money of depositors. And too much of this money has been squandered with bad credit decisions, not because the businesses went down, but because there was pressure. There was pressure from politicians, there was pressure from bureaucrats, and indeed there may also have been corruption and collusion. We need to take a really hard look at it. Hemendra is right. This is a window of opportunity. But let's not squander it going after one person or one bank. Let's have some systemic reforms to change the business.
Okay. Mr. Bakshi, very quickly then, given the fact that Caesar's wife, it was said in the show, needs to be above suspicion, and given the highest standards of and levels of transparency that is required now that there is a PE that has been registered against Mr. Doot and Mr. Kochhar, do you believe for the time being Ms. Kochhar needs to step aside and for an independent probe to happen before she perhaps resumes her role once again? She perhaps doesn't need to act right. Does she need to be seen as acting right as well?
I really cannot comment on that, but I think let us take a hypothetical case where a good loan was made, but somebody related to the sanctioning person has taken money. If that is the case, I am talking of not this case, hypothetical case. Will that be justified? Perhaps not. So, and the other thing is, Chanda, the investigation may perhaps lie outside the bank and not so much within the bank, and therefore somebody being within the bank, whether he can scuttle or make the inquiry or investigation biased or difficult, I am not able to comment. I don't think so, because the investigation, a lot of it lies outside the bank.
Hemendra Hazari, very quickly, I'm sorry, but I will have to tell you I'm very, very short on time. What does a case like this do to the public confidence in the lender? There have already been 2 runs on deposits in 2003 and 2008. Obviously, RBI needs to come out and reassure, but what does this really do to confidence, and how can that be restored?
Well, we have seen the share price movement of ICICI Bank, so it tells you what investors feel about the bank and her present occupying the chief executive's post. And that is why it is extremely important for the regulator to act decisively and ask Chanda Kochhar to step down. Now, if the regulator doesn't do that, then it is the responsibility of analysts like myself and the media to put pressure on the bank and on the regulator for her to step down. Because according to me, she cannot be seen, you know, and the chief executive's post when every morning there is some new agency which is, you know, launching an investigation into the bank and which involves her personal immediate family's conduct.
Okay. On that note, I think I'm completely run out of time here. This is also a debate that perhaps takes the spotlight away from the PNB fraud and puts it on ICICI Bank, and in some sense reignites the debate that are private sector banks better off than the PSU banks. But on that note, we will let independent agencies take their course. The regulator needs to do some more supervision and perhaps be more active, because at stake is not just fiduciary money, at stake is not just investor confidence, it's the confidence of stakeholders, shareholders of ICICI, depositors that cannot be eroded. Thanks very much for this wonderful panel, for joining me. We'll have many more discussions on this topic in days to come, but thanks very much for sparing time out this evening and being with us. And on that note, we will take a really quick breather. We come back and put the spotlight on the other big discussion of the day, and that is the fuel price hike. Fuel has put our wallets on fire.